I think it will be another nice cycle, for Apple. Our expectation is they'll have 3 new phones out, including a bigger screen OLED phone, and similar to a cycle a couple of years ago, that could open up some new pockets of demand. So I do think we're at a nice entry point for Apple, in front of that, which is now just a couple of months off. And of course, on top of that, you got the wider platform effects around services, et cetera, which we expect to continue to manifest itself in good growth numbers.
With so many products expected to be launched this fall, Will, what is the most critical when you're taking a look at the possible impact on the supply chain when it comes to getting components from Taiwan and elsewhere in the world into those factories in mainland China? What are you worried about, and what is sort of the most critical time period in order to get those components where they need to be in order to make that launch in the fall?
Well, it's interesting, Melissa, looking over the years, I'm sure there'll be worry words out there, as we approach, the launch cycle, as there are, every quarter. Last year, the OLED screens were a big focus. And I suppose, the OLED screens are probably going to be in focus again, but there's so many intricacies, behind the scenes. I mean, look, Apple has done a terrific job over time at managing the supply chain. So candidly, it's been, less of a concern for us. I don't have anything that I'd pinpoint today as a foremost concern, but that's always, something to monitor.
Tech, as you know, Will, has been a real driver of the S&P 500's performance in the first half of the year. The top 4 stocks on the S&P 500 have accounted for 84% of the S&P 500's gains, according to Goldman Sachs. I think you cover a couple of them at least. We've got Apple, Netflix, Microsoft, and Amazon in that top 4. When it comes to performance in the second half, do you expect it to be just as strong as the first half, or have we seen the bulk of the gains behind us?
Well, yeah, it's going to be tough to predict that kind of performance, I guess, for the second half, just given the outperformance we've had.
You got price targets, though, based on your price targets.
Yeah, look. I mean, we continue to recommend Apple. That's our top big cap pick. And I do think there's further upside here. Of course, they still put off prodigious amounts of free cash flow. We think there's still double-digit top-line growth driven by iPhone as you look through 2018. So we continue to like the prospects for that company to approach and maybe exceed the so-called trillion-dollar market cap. We do also cover Netflix. We've been in a neutral rating to impart the valuation. But look, I mean, this has been a growth momentum market in tech. Josh Lipton referred to this a moment ago, looking at the IPO market, et cetera. And to the degree they can continue to put up strong subscriber figures, that price supports that stock as well. And I don't cover Amazon, Facebook, and Google and some of the others, but of course, they've all had terrific trends as well.
How long have you been neutral on Netflix? I mean, it's a double so far this year.
Yeah, too long, unfortunately. Yeah, needless to say, it's been a great stock, and we thought expectations had gotten ahead of themselves, some time. So we've missed a heck of a run, here, over the last, year plus probably, in that stock. And it's really hinged more on long-term competitive questions, cash flow questions, and those are still out there. But this is a market environment that, as you know, is a little more focused on, growth momentum, and those numbers have been good on that front.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.